How we doing, guys? This is Dylan Yerkes from Breaking Chart Alerts and Santarelli Trading Exchange. Can you guys hear me on YouTube okay? Dave is still feeling a little under the weather at the moment, so I will be just doing the normal kind of market analysis. No live trading today. We are going to go over a little bit of the Federal Reserve interest rate hike meeting that happened yesterday. Again, for those who weren't able to join us yesterday, I kind of touched on that. All right, we're just going to get the market open and kind of watch and see what happens. You know, we got that big sell off yesterday in Qs, in SPY, in the Dow, across the board. We got a massive sell off. First initial spike down on the 75-point hike at 2 o'clock. I'll go ahead and pull that 1 minute chart up from yesterday. As you can see from right here, we got that initial spike coming down to test the lows of the day that we had so far, pushed through, but as you can see, it just consolidated and came right back up as Jerome Powell started speaking. At first, he started to sound like he was a bit bullish and hawkish on the economy, but then as you can clearly see, his words were not so promising. We're getting a low open at the moment right now, not too incredibly bad. We'll just see what kind of happens. And at no point yesterday was he, in my opinion, talking about any positivity coming out of the markets. You know, he was talking about how there's gonna be much more pain ahead. Literally used the word much more pain ahead. But we have to have the pain coming now in order to be able to fight inflation and everything going on. So it'll be an interesting next few weeks for sure. We just got unemployment claim numbers come out. It was 213K actual versus 218 expected, which is better than expected. However, we are still up from the previous 208. So unemployment rates are still rising right now. We've got continuous claims for that at 1.379 million versus 1.4 estimated. Prior was 1.403, so that is another negativity as well too. Jerome Powell was talking about this yesterday. He said that in order to curb inflation, you know, you have to bring demand down. Let me wait till Charlie finishes. You have to wait until you have to get demand to come down in order to get supply, which received a whole bunch of shocks from the COVID pandemic to now, in order to get that to kind of regulate. You know, that is bad for the American people, bad for the lower and middle working class. You know, to be able to while rising rates are going on, you're losing your job. You know, and it typically, you know, rates. Inflation rates will kind of follow after the unemployment. You know, you'll people will start to lose their jobs now. You're seeing job cuts across the board in all sectors, and the working middle class is not able to handle this. You know what I mean? This is something that is going to be very detrimental to the economy. So that's something to kind of watch and keep an eye out for over the next few weeks, over the next remaining months. You know, Fed said that their expected inflation rate was to be about 5.2 if I'm staying corrected by the end of the year. I do not see that being a probable unless they are extremely more aggressive in their next rate hike meeting. He did say a 75-point rate hike will be pretty much almost a guarantee. So we'll just kind of see how numbers come out over the next coming weeks to see the overall health of the economy. As you can see on a SPY daily chart, we're not looking good. Not looking good. We are coming down to these lows right here at the 370 level. Below that, as you can see, we don't really have any major supports kind of coming. You've got a couple little support back here at 372, back at 368. These are little, in my opinion, minimal supports. You know, we don't get our next major supports until right over in this consolidation area that we had from about, we'll call it August of 2020 to about October of 2020, November. So interesting to see how far that's going to go. There are a lot of ranges of levels where this can hit and kind of bounce, but I do highly suspect that we are going to be seeing a lot of a lot more downside pressure basically in the markets. As you can see, first 4 minutes of the markets being open, we're just continuing to climb right to the lows of the day. I do believe we're going to push through this. Could be, you know, I know that a lot of you guys in the trade room were talking about, and in GroupMe, y'all were in the let's see, captains in 380 puts for Fridays. Jerry's in 378s for Fridays, 375s for September 30th. I'm Randy, 380 puts for Friday, 375. So obviously, you know, the overall sentiment is to the downside. It looks like you guys I wish you the best of luck on those trades as well too. Those are a good hedge against the shares that we have, the exposure that we have open at the moment. So I will be looking to make those on my own as well too. Again, no official trades will be taken, but I am in the same ballpark as you guys. Just kind of watch the markets for a few minutes. I'm gonna pull a couple things up real fast, and we'll kind of talk about some news articles. There's a nice little consolidation going on at the moment. Nothing much happening. Down 0.16% on SPY, 0.38 on Qs. Watching Qs over to the left, to the right. So last night I couldn't sleep. I was up reading things on the job numbers, Justin. Those are going to be, those just go with whatever everything that Jerome Powell was saying. You have to have unemployment running high. You have to bring demand down. Basically, this was pretty much expected. It wasn't as bad as expected. Obviously, it came in, a little bit better than what markets were predicting and all that. But still, like you're going to see a lot more. In my opinion, you're going to see a lot more falling in the markets as demand needs to come down. Jerome Powell said nothing positive about the markets yesterday. He was talking about how uh, they had to start curbing inflation. In my opinion, what they've been doing so far hasn't really been that effective. You can't see any real change so far in the rates as fast as you want to, as fast as they've been tightening. Um, and one thing that caught my eyes, I was saying earlier, I couldn't sleep last night, so I was up reading some macroeconomic news articles. And one thing that I noticed, one thing that I read from this gentleman that I follow, and I'll pull it up right here for you guys, is that right now, that's not what we are seeing in 2022, no matter how many times it's been claimed otherwise. Data shows unequivocally tight money wreaking all kinds of havoc. Even as U.S. short-term or U.S. Treasuries, both short and long-term, have sold off, it hasn't been because of 70-style inflation. The only factor pressuring bonds in general is the Fed and its limited ability to influence the short end of the yield curve. The yield curve being the twos and the tens and the 30s, all inverting back. Which, whenever that happens, that typically means that there's not a lot of positive outlook in the coming years for the long term, basically. So investors, both here and overseas, aren't going to be looking to invest into those, but into the longer terms, but they are going to be looking to invest into more of the shorter term. So that's why you're seeing the 2 year. I'll pull that up very quickly. That's why you're seeing the 2 years bonds right now higher, significantly higher, if I would say that, 4.103% on the 2 year bonds versus the US 10 years at 3.644. That means that right now there are, these levels haven't been hit since, where was it? Back over here in, back of September of 2007. So this is record highs right now, back previous to back 15 years plus or so. We're coming up back to those levels again too. It's interesting that you see this. One thing in this article he talks about is that it is excuse me, it is interesting to see this kind of action going on right now because as the Fed raises these rates, you are getting a you are not getting as much return on your investment basically, you know. So as nominal rates go a little bit higher and inflation runs hot at 8.3%, you still have negative real rates on these yields for the most part. You take 8.3 and you subtract that from 4.10, you get about a 4.2% negative real yield. So it's interesting to see that as the market and economy goes down, right, the bonds themselves, even though they're going up, they're still being flooded into with a lot of people getting these negative returns on these bonds. So are people more afraid of putting their money into equities, or are they more afraid of putting their money into the bonds? As you can clearly see, this is a monthly chart right now. So this is from right over here once it started back on September 1st, 2021. You can just see that giant rise, you know, in foreign investment banks and foreign investment bodies basically selling record levels of US securities in order to purchase into bonds, not taking the proceeds from it, but and purchasing putting them into bonds, but purchasing them nonetheless as an inflation hedge, although you're getting a negative real return basically. So that is something that is kind of curious. That doesn't kind of make sense. One thing I spent about a 4 hours last night just kind of going over all that. I could not sleep, and I just went down the rabbit hole of treasury bonds and yields and what everything that was going on. So there's a lot of cool charts that this gentleman posted as well too, as you can see right here. You know, this is the U.S. tick, the treasuries of long-term domestic securities. As you can see, the red is going to be 6-month cumulative net buying, selling of equities, while the 6-month cumulative net buying, selling of long-term U.S. treasuries. As you can see, June of 2022, we got a massive, massive spike over here in these U.S. treasuries. As well, too, you're getting a massive sell-off of U.S. securities, equities, basically. Euro dollar, yeah, the euro dollar right there. I had a lot of trouble. I had to look that up a while back. The euro dollar just is a reference to all American U.S. dollars that are outside of the United States right now. It's all a part of a giant banking system as well too. It's just a different kind of policy that kind of goes on out there basically too. But it all plays into this. You know, this is a lot of foreign investment as well too. There's a lot of countries right now that have a lot of U.S. Treasury debt because you use them as reserves. You know, it's almost a, I don't want to say a soft peg for the most part, but it is a way for them to kind of have some reserve, take on a part of U.S. debt. And as you can see, it's interesting to see that why would, as interest rates are going higher and you're paying for more on the debt itself, that more people are kind of flooding in, more investment banks and bodies are flooding into this kind of thing. So just very curious price action going on right now. Very interesting to see where the currencies are kind of going. So things to kind of watch out for right now. You did get a, oops, excuse me. You are having a little bit of a pullback on the dollar right now, not minus 0.23%. You know that did come yesterday on I believe it was a Swiss National Bank and their statement on the U.S. on the economy. I didn't hear it. It was at like 4 in the morning, so I wasn't. I'd finally fallen asleep by that point. But these are all things that we need to pay attention to that affect our economy as well too. You know, they are there are talks all over CNBC, Bloomberg, all the major news sites of a global recession looming. You know, that's a global recession. So as you can see right here, you got a drop in the dollar. I forgot I was on the monthly chart. Apologies. So this is back to that daily chart. We got that nice pop that we had called out right here, so you could have ridden that up. This right here is starting to kind of form a little bit towards the highs back again, but we'll kind of see what happens. As you can see on the dollar right now, we are getting that big pop as the U.S. markets kind of sell off right now. That is the SPY. As you can see, just nothing but tanking from sky. So I'm sure all y'all's positions that y'all are in right now are paying off pretty nicely. As you can see on the histogram of the daily chart on SPY, we're just getting those nice red candles on the histogram right here. The signal lines are below the histograms. We're in the below 50 range for the RSI, which is an indication of a downward trend. So I do expect to see a lot of ugliness today. I will not be on YouTube very long today, guys, since we are not doing any live stream trading. I just wanted to kind of give you guys a sense of what's going to be going on. If Dave can't make it, I'm going to start hopping on, you know, just to kind of give you guys some of that more content. You know, I'm a big fan of listening to news events and everything. So, so yeah, guys. I like hearing news articles come out. It's just interesting to kind of see a little bit of a change. I know the trading is fun. I do apologize. Dave will be back as soon as he can. He did tell me that he was definitely going to be back on today in the evening. So we will be able to see him then. He may be looking to take some overnight swings into tomorrow if we can kind of stay in this little bit of a low area. We just had a big massive sell-off today or yesterday, so we could actually end up seeing a bit of a consolidation. It is something to kind of watch out for. This is the kind of price action that I like to stay in a trade at. I'm not the biggest fan of entering into a trade like this because, as you can see, this has been a long extended move already too. So we do need a little bit of a breather. However, if you're already in this position, that is looking solid for you. So good job on that. And what I was going back to, just to give you guys kind of an idea, this US Treasury curve, that is what I was talking about with the inversions of the curve. So typically what you want to see is you want to see the rates headed higher. You want to see these going up like this. You want to see them not touching each other. As soon as you start to get these crosses like this, that is not a good sign. That means that more money is starting to be poured into shorter term bonds and yields and treasuries in order to get their money back faster, basically, too. So that is something to kind of keep an eye on over the next few coming months and into the next year. I don't believe that there's a way to curb inflation down to 5.2, 5.3%. I think it was somewhere along in those lines. I think that's going to be if you're going to do that, then you're going to be tanking the markets a lot more. Which what's more important to the Fed at this point? Is it the markets, or is it are they actually concerned about the American people and everything that's kind of going on? So as you can see, they clearly aren't. The markets are already pricing all of this in. So the markets do this on themselves. I don't believe. The Fed does have a lot to say, but I think that a lot of people give the Fed a lot more credit than credit is due towards them. I think a lot of this, there are a lot of smart economists out there. There are a lot of smart fund managers, bankers, all this other stuff that know what's going on, know the overall health of the markets. And as you can see, there's just been no positive sentiment whatsoever. We got a little bit of a bounce, but just sell off over the remainder over the previous since the beginning of the year. Excuse me. We're still in that downward channel kind of right here going on. If you wanted to tag from here, maybe down to about here, if you wanted to get a little tighter with it, we could go up in this area. I don't really like that too much. It's not as pretty as I'd like it to be, but we'll just go on the little bit of the outer side, just make it a bigger channel like this. But we are headed back down. Dave says, if I was trading today, I'd be buying puts. Well, I certainly wouldn't be buying calls, I'll tell you that. Who all, if y'all can, go ahead and post what you guys are in at the moment. I'd like to kind of get the general idea. As you can see, Dave is being a little active at the moment. We'll go over some other things as well too. We'll start looking at some of the market movers. We'll start looking at some of the unusual options activity. We'll start looking at. I was trying to get upgrades, downgrades, and initiations today on our thing, but the site was down. Let's see if it's back up. Oh, finally, I'm getting it back up. I wasn't able to post that today. So right now, here are some of the current downgrades that are going on. Luminar Technology. I've been seeing a lot of action going on with Luminar. There's been a lot of upgrades, a lot of downgrades, a lot of unusual options activity. Let's see if it's still on there. I think I saw it this morning. Yep, I did see it this morning. I was correct. So right about here, you can see Laser, LAZR, Luminar Technologies. You've got some decent little call or some put volume going on right now. I've been watching this stock a little bit. It's a little on the cheaper side, so anybody with the lower end accounts, you might be able to get into those a little better. Appreciate it there, David. Oh, very nice, guys. Can't log into the live Zoom. Are the links above? Good. All right. All right. So as you can see, a little bit of just some mixed action going around. You've got some AMD calls. We'll take a look at that. That's not a heavy number. I don't want to really focus on that. Not a big fan of playing Nikola. Meta's got some calls going. That I know that was falling for a bit, so that could be back up. Not a whole heck of a lot going on. Let's take a look at the ETFs. Q's puts, obviously, and that's a pretty decent big size position. SOXL calls. That's a very large position going on. Now remember these, when you see these volumes like this, it doesn't necessarily mean that it's going to be driving the markets up, because only buying and selling of the actual security itself will drive it. These are just orders on the underlying stock derivatives, if you will. Q calls, Q calls, Q calls, Q puts, these calls. Look at that order size right there. So that goes to show you that there are a lot of people that is for 923. That's for what, tomorrow's expo, correct? Q's at 292. I want to take a look at that real fast. I want to know what these guys are looking at. This is clearly not what we're looking at. Oop, that didn't mean to go there. Q's, that was unusual. That was a 292 call for tomorrow's expo. 292. I don't I don't really see Q's coming up another 12 basis points by tomorrow. That's it's a pretty big position there to be headed the opposite way. I'm sure they're feeling the pain on that at the moment, but you know, you never know. This could be a hedge position for them. A lot of these big time whale investors, they got a lot of money. As you can see, SPY tried right here. SPY tried. You're welcome, John. Not a problem at all. SPY tried to break out a little bit right here. Still got that downward pressure, as you can see on the we are getting the signal on the MACD of the crossing. We are way below the histogram at the moment. So as I was saying earlier, this is extremely oversold at the moment. We could see a short-term relief at any point right now. We will just kind of watch and wait and see. There is still just a lot of downward pressure. A lot of people that are still pricing in and getting pricing in the rate hikes and the, I would say, dovish stance that Jerome Powell had. I was listening to Jim Cramer on CNBC this morning, and they were saying that he said nothing positive about the markets, basically nothing at all. It was all just there's more pain. Let's check out Sava. Look at Sava taking off right now. I'm sure Captain Thomas's shares are looking pretty nice at the moment, almost back to the previous highs of yesterday. No, those weren't highs, but getting a nice pop here. Might be one to look at if you guys are interested. And I've seen a lot of volume coming in on this at the moment. What is the market cap on Cassava Sciences? Yahoo Finance. Cassava Sciences has a $1.557 billion market cap, so that is technically a stock that I would start to look at. If I wanted to kind of go that's when you see them have a bigger market cap like that. Now that's still not a whole heck of a lot of money, but it's better than a few hundred million or so. So that's I typically don't like to look at stocks that are under a few billion, only because they can be very easily manipulated. As you can see, you've got some big swings back over here from just July of 2022. It was at $14 from that low right over there. In just a couple months time, you're already up 165%. If you wanted to do something along those lines, you absolutely could. It probably would pay out very nicely. But those are always those ones that you got to be extremely careful on. Look at the volatility starting to come in way above the averages of the volatility that we're used to seeing right now. Captain Thomas, that is a nice one to kind of look at. Correct. Correct. Polly. Sava just taking off. Let's see what SPY is doing. We are past the 9:45 mark. I will go ahead and pull up the heat map, see what's going on in the sectors right now. Come on there. As you can see, let's make sure this is refreshed and ready to go. Technology just a little flat on the day right now. You got Adobe down a little bit. Semiconductors were up big yesterday and then came back down. You got Nvidia down 1.46%. AMD following suit with the same. Information tech a little, I wouldn't say it's a little on the climb. This is just one stock that's a little out of the others. Software, same thing. One stock doing better than all the rest of it. Healthcare, little on the higher side. J&J, Johnson& and Johnson up 0.14%. Eli Lilly up 1.89%. That was when we were looking at. Wait, I know that Eli Lilly was coming off of lows. If we want to pull that up real fast, I had that over here. So it could be a nice little bounce off of the lows that we saw over here. This is the next major support zone that we have right over here. Yep, Mohammed. I was just looking at J&J right there. This is Eli Lilly, same sector. We just got that bounce. It pushed down below. So this is one of those things you got to kind of watch out for. You know what I mean? When you draw your little support lines and everything too. I know that these aren't perfect. These just kind of give us a little bit of an edge. But if you look at it, that's technically like a breakout right there. This could be where you would break out, especially with the overall market sentiment down to the bottom. A lot of people will kind of get in there sometimes and then be faked out by big money, as it comes back up above. So one you got to watch out for. But that is up about 2.82% right now. So that's getting a nice little climb. Let's go back through capital markets, financial carpet, Morgan Stanley, Schwab up a little bit over 1.5% on that. You've got financial credit services down right now. You've got banks down at the moment too. A lot of red going on. XOM up 1.50%. That looks great for the trade that we've got going on. You've got ConocoPhillips up 2.02. Oil and gas E&P, that's a great one, 2.25 for overall. This is looking great. Energy sector. Let's go ahead and take a look at that real fast. ExxonMobil up 0.64%, so a little bit behind there on that S&P heat map right there. Still, we hopefully want to see this kind of come back. We still do have those open positions. We do have that long expiry on them, so we are still holding at the moment. If you feel like you wanted to get out of this, you absolutely can. There's nothing holding you against it. I know Dave had this as a bit of a longer term play himself too. But in the meantime, while we're down on these trades, we're practicing the risk management that we like to employ. We teach this stuff. This is part of position and trade management. If one thing's not going out of your way, go hedge it with something else. Right now, you can absolutely take a lot of those hedges over in SPY for those shorter term gains. As you can see on a 1 minute chart from yesterday, we had those big candles, big bodies below bodies. Big. No, anytime we got a relief, it wasn't. It was very short lived, and it was just massive selling, massive selling. But right here, as you can see, that this is just starting to kind of, in my opinion, slow down a little bit. Now these slowdowns, if we don't get a bounce back, sorry, I'm letting Charlie speak when I hear him. If we don't get a bounce back, then this would be considered what I like to call a low basing pattern, and a low basing pattern a lot of times is one of my favorite to kind of trade. It goes perfectly for the most part with that breaking chart alerts plan that we go through. You get a little consolidation zone, you get a little comes down, and then it just bases for a bit until the moving averages kind of catch up and then push that price down a little bit further. So we could definitely see that. That is one thing you want to watch out for right now. You do see the moving averages start to kind of converge when they're further apart like this. That means that there's a lot further selling going on, further apart, and then you start to see them tighten up. That means that the buying is starting to kind of come back in a little bit. You're starting to see that even though if you look right here on the RSI, we were oversold on the 1 minute right here. Now keep in mind these aren't perfect. These are just little signals, but these are things to kind of keep an eye out for. The RSI was oversold right here, and we were at these lows. Then we made a lower low right here, not by much, but still a lower low. And look where the peaks of these lows are. They're above that 30 line. Starting to head back up. So this move is a bit overextended, and as you can see, even though we're pushing lower right now, we are curving up on the signal lines. So MACD doing the exact same thing. One thing to be very, very careful about. Golden Boy, I appreciate that very much over there on YouTube, man. Glad I could be of some assistance. Like I said, if you were here earlier, I'm not doing any live trades. If I see a trade that I like, I could be like, hey, this is where, you could enter in if you wanted to, but they are not official trades. I do not do any official trading. So keep that in mind, okay? I just want to reiterate that to you guys. As we continue on through that S&P heat map at the moment, let's give it a refresh, see if anything's kind of changed. Overall, just some red still. We got Tesla down 1.72, Amazon down 1, agriculture, Corteva, those are up. Those aren't very big sectors to kind of pay attention to. So we'll just kind of watch and see how everything goes. JP Morgan, I like that JP Morgan, and I think it was the Bank of America chart yesterday. I was watching those. Yeah, so look at that wedge. That's classic right there. That is awesome. So what you would want to do now, is as soon as you saw this kind of this breakout from this little wedge pattern with the overall market sentiment, especially in the financial sectors, you could have entered into your puts and then boom, targeted right to those right to those lows right there. Now because this was such a long consolidation and now we finally got that big rate decision, we could definitely see these levels start to push even further. There isn't much support. You might get a little support back up at these resistance level right here that was broken through. You might get a little bit of a bounce down to that area, but overall the support isn't to the downside for another. Let's see what that is from here to here. That's another 6 point. We'll call it 6.5% for the most part on that. That could be a big play. JP Morgan I know looked the exact same as well too. That's a nice looking break. Now this one in my opinion looks a little bit better. You were a part of that wedge still going up through here. You wanted to get it. We could have even expanded that out just a little bit more. Either way, it doesn't matter. You get the overall idea of what I'm trying to say. Overall downtrend, wedged, and now you see that big breakout. Closed below those lows from yesterday for the most part. I would average that out to maybe about right there. We'll call it 113 even. Let's see what that looks like. I'd go maybe a little bit higher, but we'll just leave it at that for the moment. As you can see, it closed below those lows anyways yesterday. That is perfect for just your confirmation candle right there to start looking into that. Then at that point, that's when you can start to kind of switch into waiting for kind of a pullback. At this moment here with market open, you know that we're going to be heading lower. That would have been a nice area for an entry. You could have had a nice entry over here. You know what I mean? So that was a nice play I was looking at. I'd been calling that over the past couple of days. I know a couple of you guys were saying that looked like a great chart. I thought so as well too. FedEx opening way lower, still in. Or not, I'm sorry, this is the daily chart. After that big announcement of the outlook on the global recession from the CEO, haven't seen much positivity in FedEx over those last couple of days. So but guys, over on YouTube, it is time for me to get off on YouTube. I am only doing 30 minutes today since we're not doing any live streaming, any live trading at the moment. Just wanted to give a little bit of a market analysis. I hope that you guys enjoyed everything today. Thank y'all very much. Go ahead and head over to our website at breakingchartalerts.com. You can sign up for our daily newsletter where we post daily morning events. We do trade alerts as well too as part of memberships. Go ahead and check us out, okay, guys? Thank y'all very much. Have a very, very wonderful rest of y'all's day. I hope you enjoyed everything.